Welcome back, everyone. I hope your day has been greener than mine. I'll be honest, today has been a bit tough because I incurred some trading losses, back to back trading losses from yesterday's position to today. But before I get into that, I would like to talk about the book I read this morning, The Little Book of Common Sense Investing by John C. Bogle, the man that founded the Vanguard Group and also popularized the idea of investing in index fund to the masses. He kept talking about the public investing in index fund instead of trying to pick a stock that will outperform the market, because according to him, only few people have been able to outperform the market on a consistent basis, like Warren Buffett, Ray Dalio, Bill Ackman, and George Soros. These are the ones that I can mention on my own because I've read about them and I've heard about how they've been able to perform the markets on year-to-year basis. He says the masses are better off investing in index funds because overall the market, according to Warren Buffett, is a weighing game instead of a voting machine that happens in the short term. So the market being a weighing game means that a bigger time frame, let's say 20-30 years, the market goes up exponentially. But when you're trying to pick a stock on a monthly or 6 month or year basis, it's usually for the average investor does not go well. So the average investor is better off investing in index fund. And the second insight I picked from the book was when he talked about mutual fund and the croupiers. I think, yeah, croupiers. Those are the people that make money in mutual funds, like the people investors give their money to, the lawyers, the mutual fund managers. So the individual investor that gives money to mutual fund on the long run don't make as much money as the mutual fund because of the exorbitant charges that they get. It's 2.5 charges according to the book, and most of the mutual fund underperform the S&P on a yearly basis. So they are better off investing in the index fund according to him, because mutual fund doesn't normally give the investor an advantage on a longer period of time. The last point that spoke to me was when he talked when he, the last point that spoke to me was when he brought a quote from Warren Buffett, which says the average investor returns decreases as motion increases. And this kind of brought again to my trading as a whole, and the reason why I'm currently trading the way I'm trading. That quote from Warren Buffett spoke to me a lot because I've seen it a lot of time in my trading activities, that the more trade I take in a week does not necessarily mean I'm going to make a huge amount of profit. So far, I have taken 3 positions: Audi card, Euro card, and gold. The first position I took was Audi card, which was successful from entry to take profit. Although it did not take profit, but I I got I got just 13 pips. I got, yeah, 13, 11 pips below the take profit. So that's nice. But the Euro card, I actually left early because I saw that the pair rejected the upside and it was looking like it was going to go down before it goes up. Because I was having a tight stop loss, I felt it was better for me to leave the market than probably come back in. But I left it and I did not bother coming back in when the market was much clearer, because I felt like I had a better chance with gold. And gold, because the reason why I entered gold in itself was because it has a double doji on the chart. So because of that double doji, the normal rule for when you have that kind of pattern was the next candlestick supposed to shoot up, but it did not shoot up. And I kind of talked about this wishful thinking that Jim Rogers talked about in his book. That kind of came over me, but not actually that. The reason why I actually took a loss on that was because I shut off my trading brain in a sense that I was not interested in trading anymore, because I felt like I've taken my last position of the week already, so there's no need for me to pay much attention to the trade. So when the candlestick got printed, I was not really paying attention to the charts that much. And when I woke up and I saw that I was already halfway through the losses, I just, instead of me to just cut my losses short, I just decided to just leave the trade. I felt like maybe the lesson will be much more impactful than me cutting it off, because the lesson I've learned so far was that regardless of how many trades I've taken so far, I should always be active in I should always be active, checking the position on a 4 hour time frame and seeing if there's any rejection. Because that also saved me from incurring a loss yesterday from Eurocard. Although the position went well today, because picking my stop loss, it went up, but I did not allow it to reach my stop loss halfway through my before. I think 10 pips on the way to my stop loss. I took the position out, but gold today, I was not able to do that because I kind of shut off my brain, which was a bad habit that I'll need to disengage from going forward. Yeah, so that's how my trading went today. So, and I've just felt, and because today is a Thursday, and I start feeling this like a rush to go back into the markets. My body keep telling me you can do this, you can do this, and I just felt like I'm not trying to break the rule that I've set for myself, because because the trading, me and my friend actually trade the same strategy. We both take the same trade. I give trade for it was supposed to be 6 position in a week, but I picked 3 trade and he picks 3 trade. So me, I've already exhausted my 3 trade for the week, and he has already exhausted one, so it remained 2 for him. So he gave me a trade which was GA today, but when I took the pay, I was not really confident about the pay because I didn't like the way it looked. So instead of holding it, I just kept feeling this anxiety. I kept taking the chart. I just thought, God, this is not good. This is not how I want to move this 2026. So I ended up closing the trade because I didn't feel comfortable taking it. Although I still have to take one more trade from him if he brings it to myself, but I would like to trade a position that I'm much more comfortable with from a price action perspective. So yeah, that's what I've done so far. Yeah, the main thing that I've learned like that is going to be tough. This me trying to create a new habit that's leading to profitability is going to be very tough. But the main thing is that I have to stick to it because nothing so far has worked. So instead of rushing myself on a daily basis trying to look for position, I should just stick to the ones that I had. And I think I had an insight. Yeah, I had an insight from today's trading activity that whichever pairs I pick, even whether or not they are correlated, I should always stick to the pair throughout the weeks. There's nothing, regardless of what happens, I'm sticking with the 3 pair I pick for the week. Because as I felt like that was what stopped me from any profit. Because as of yesterday evening, I had 2 positions. I had possibility of shorting card JPY and I had the possibility of longing Euro card. But because I was feeling like it was correlated to Audi car and maybe something might happen that I might not be expecting, I just left those positions and I went to look for a new position that was not among my weekly pay because that was how I thought maybe I was supposed to approach it. But with what I've learned today, it's much better for me to sit with the pairs I pick for the week, even though I don't have a position. The main thing that as of yesterday, I've already met my target of over 100 pips in profit for the week. And so today, right now, I'm below 100 pips in profit. I think I'm around 80 pips in profit for the week, but that's still good. That's okay. So for now, I'll just be calm and I'll be patient. And the lesson that I've picked up today is will be applied next one now, and I'm 100% sure that I will do better than I performed this week. So that's just it. And yeah, those are the things I've those are the, and yeah, and that's all I have to say about trading too. So the book aspect and trading aspect I've done. So the next part should be what I have actually seen or that excites me on the internet. The only thing that excites me on the internet, I was watching Andrew Liu finance video on YouTube that he created when that was shot when he was in MIT. So there was this, he kept talking about this something about finance as a approximation of life. So that approximation just took me and I brought up a tweet that and I, it just like it just brought like a quote to my mind that the life we live right now is an approximation of the complexity of reality. And I posted it on my Twitter, which you should be seeing right now. So it was nice. It was nice. So I actually, from the way he was speaking, I was able to bring a quote from him that relates to the philosophy of life if we deep dive into it. So yeah, for the internet part, I've not actually seen anything that excites me on the internet today. So that will be the end of my day 4 video journal. thanks for watching, and I hope you all enjoyed this one, because the main purpose of this journal is just for me to be as honest as possible with my day trading life, with my book reading, and with things that I've seen in the internet that maybe excites me for the day. Because I'm trying to keep myself as check as possible to give myself a whole new level of accountability, because it's only through accountability I can hope to break through the range of unprofitability and enter into the range of profitability where I'm able to make consistent money in the market. And these rules that I've said so far are going to be the guideline that I follow going forward. So thanks again for watching. We'll meet tomorrow. Bye.